Good morning, everybody. This is the live market open for Monday, December 21st, perhaps the shortest day in the year. I'm Yohay Elam of Forex Crunch Market Movers podcast, doing the show as usual for FX Street. Hope everybody had a great weekend. Some of you are already on vacation, I guess, and this is the week of Christmas. We'll still have the usual show today before we go on vacation. So as always, we'll talk about the recent developments in markets, charts and levels, the next 24 hours, and of course answering your questions. I see already a few people in the room. Good morning, Sinatra. Anyway, good morning to everybody else here. If you can't see the chat box under the video, please go to the address on the screen, tlk.io/fxstreet -forex-live-video. Okay, so let's talk about what we had on Friday. On Friday, we had the last step of the implementation of the rate hike. So last week, we had a huge week in economic history, if you wish, and well, maybe it's overhyping it just a bit, but it's a historic rate hike of the Federal Reserve, the first time in nearly a decade, the first time since 2006. There were worries about the actual implementation, but the good news is everything went smoothly, and we now have an effective interest rate of 0.37%, in the middle of the range between 0.25 to 0.50. And beforehand we had it around 12, 13, 14, 15 basis points. And this changes, of course, every day, but all in all, it's working quite well. And the Fed prepared for this moment for 2 years in all kinds of exercises using its New York desk. And when the time came, everything went smoothly. Okay, so some had doubts that the Fed would just not be able to pull it off technically, but it managed to do so successfully. Okay, so that happened. We talked about this last week, and the fears were a bit exaggerated. Okay, and what we also had on Friday, and we had echoes from also today, is that the Bank of Japan decided to introduce some new monetary steps. A very, very limited stimulus. At first, the yen weakened a lot. Dollar-yen jumped because many people thought that the Bank of Japan is introducing a new stimulus, new printing of yens. Eventually, the program was just replaced. An old program was very limited in range and triggered the opposite effect. Why? Because if this is what the Bank of Japan does do when it decides to make a change in policy, that means that real stimulus is off the charts. Okay, so we thought we would have big stimulus from Japan in October. That didn't happen. Things have improved in Japan, and but an option of doing something big was always on the cards. But when we did have something and it wasn't big, that's of course negative for sort of lowers expectations, negative for dollar-yen, strengthening the yen. Okay. In addition, we had Canadian inflation missing expectations. This sort of added insult to injury for the Canadian dollar. It was the Canadian dollar, of course, suffers with oil prices, suffers from not so convincing economic figures, and this was sort of another hit for the loonie. And we had elections in Spain. They resulted in a hung parliament. So we have no party winning a majority. No two of the big parties winning a majority. We can talk about that in length, but what happens now, sort of the headline for this morning, is that after all the years of Spanish democracy since the late 70s, we always had two parties changing rule between each other. Traditional Partido Popular, the center-right, and the socialists, PSOE. And this time it's a four-horse race, and many small parties also have influence. It's a mess. They're going to be in coalition negotiations, and it's unclear what's going to happen. So what we do know is that the Spanish stock exchange began lower. Of course, this situation of uncertainty is something the markets don't like, and eventually it could impact the whole Eurozone. Spain is the Eurozone's fourth largest economy, much more important than Greece. And there's, of course, the question of Catalonia, and we can talk about that in length if we have time, but let's focus the moment on Forex. Let's look at a few charts. Sorry, so we had quite a quiet beginning to this week. We had euro dollar drifting a bit higher, going up there to resistance around 108.80. Okay, this is weak resistance. 109.50 is stronger. 110, 110.70 are stronger lines. On the downside, we have 108, the round number of 108, which works very well. The euro is a bit strengthening in what I call, or what everybody calls, risk aversion. Okay, uncertainty in the eurozone around Spain, and uncertainty and some worries about global growth strengthen the safe haven euro. Same goes for dollar yen, which is a bit lower. Well, still stuck in range. 121.10 is support. 121.50 is weak resistance. Strong resistance at 122.20. What we see here, where I'm standing with the mouse, is this leap on the expectations on the misunderstanding of markets that the Bank of Japan is introducing lots of stimulus. So we had the jump towards 123.60 and then the big fall. Below the clear separator of ranges 122.20, found support at 121.10 and now drifting lower in range. Pound dollar is well, stabilizing a bit higher, but nothing extraordinary. The Bank of England, the Bank of England is not in a rush to raise rates, less than it used to be, they're going to raise rates after the Fed. So I was talking many times that they're next, but recent developments, the falling wages and worries about the global economy also sort of send signals, create uncertainty from the Bank of England. Now the pound is weaker. 149.20 is the current level. 149.50 is resistance. 148 is support. Okay. Moving to the Canadian dollar. It touched 140 on Friday. I told you we don't have too many resistance lines, and 140 is only sort of the round number, so we can stop over there. And there we have it. So far, the pair stopped there. Okay, it made only this sort of peak above this level and went back to lower range. But it doesn't mean that the Canadian dollar has bounced off resistance for good. I mean that dollar CAD is not, doesn't mean it's going to fall. The Canadian dollar still has its weaknesses from oil prices. So I think it's just some kind of consolidation. And if we have another fall in oil prices, we'll have another fall in the Canadian dollar. Right? Let's zoom out just a bit. So you can see this huge leap of rise of dollar CAD. 134.60 was resistance for quite some time, and then once we had the break, we had a pause at 136.20, a pause at 137.87, maybe not another pause now at 140, but it depends a lot on oil prices. Okay. Let's jump to oil prices. On Friday we had another, maybe you can add here a line on WTI crude oil. We had it here 34.27. Sort of a double bottom here, but the pair is still, sorry, the oil prices are still looking for some kind of bottom. 35.65 is still very low ground, unsustainable. We had talk, I think, from the Nigerian oil minister on Friday that if these prices continue, they'll have to have an emergency OPEC meeting in February. An emergency meeting doesn't mean that they'll be able to decide on anything. And it's also important to remember that OPEC is only a third of global production, and nobody seems to be willing to stop oil prices. Iran is expected to come back online. Inventories in the United States are growing too much. The United States is about to lift a ban on exporting oil, and this is also good for Canadian exporters. Good for them to export oil outside North America, but also means that the global market is going to be ever flooded with more oil, and that's not good for the Canadian dollar, of course. Okay, let's go back to other currencies. So we have the Australian dollar sort of back above 71.50. Very nice separator of ranges. It's really a nice line here, like the 70 to 80 line that we talked about many times, how it works well to separate ranges. So 71.50 has the same role and lower level. I still see 71, the pair fell to 71 on Friday, and I still see 70.65 as support, even though we had a round number over there. So the Australian dollar is a risk currency. It's trying to recover, but it's not that easy. New Zealand dollar has shown us a lot of strength in recent weeks, a lot of resilience, withstanding the Fed hike. We had good milk prices last week in New Zealand. They rose for the second consecutive time, and the RBNZ is really in no rush to cut rates further. It probably reached the lower bound, at least for now, for reaching 2.5%. 67 is some kind of support. 67.90, 69. Further support at 66. Okay, dollar Swiss, remember, as always, influenced by the Swiss National Bank, finding support at 99, resistance at parity. Euro Swiss, well, look how I think the Swiss National Bank defends, unofficially defends, 107.60. More or less the pair is supported over there, resistance 108, 108.40, very limited ranges. This is the pair that the Swiss authorities care about most, okay? So let's move to euro pound. The weakness of the pound and the relative sort of resilience of the euro, stability of the euro, pushed this cross higher, close to 73. 71.60 is support, 73 is resistance. Okay, euro yen 132 bounced from the lows. 131.50 is already weak support. 130 the round number. 134.20 is resistance. And pound yen, one of your favorites. Well, stronger yen, weaker pound. Clear result here. 181 currently at support at this round number. Lots of lines to the upside. To the downside, we have 180, which is a round number. To the upside, I would say that strong support, strong resistance only at 182. Okay, quite a change, of course, for this currency pair. All right, so we covered all major, minor, and major crosses, of course. Let's talk about events for today, and looking forward, as always, to your questions. Good morning, Jax. Good morning, Sinatra. Good morning, Ramiz, and whoever's in the room. Thank you for coming on this week that many people are already on holiday. So we don't have many important events for today. We have the Bundesbank monthly report. The German Bundesbank is the most hawkish central bank in the Eurozone. Orthodox, scared about inflation, sometimes fighting windmills like Don Quixote. Anyway, the Bundesbank monthly report. Let's see how they see the economy. We're now 3 months away from when the Volkswagen crisis emerged. So I think the situation is not as bad as at least I feared regarding the impact on the German economy and the Eurozone economy. So they will talk about this. They will talk about what's going on in China. They'll talk about inflation, about the Fed hike, perhaps, but maybe it was composed before the rate decision. So let's see how they view the Eurozone economy, the German growth, and this could have some impact. And we have Eurozone consumer confidence at 3 GMT. This is an official survey from Eurostat, from the ECB. So it's expected to show a bit less pessimism. Let's see the FX Street monthly. Let's refresh this. The ECB monthly report. First of all, we had this morning producer prices in Germany, bang on expectations, minus 0.2 month over month and minus 2.5 year over year. So prices have dropped 2.5% in November. Producer prices, well, also in the United States, the Chicago Fed National Activity Index. I don't think it's that important. It's not like the Chicago PMI. And then consumer confidence, look, it's expected to stay almost unchanged. A small rise from minus 5.9 to minus 5.85. So we've already seen worse days over there in the Eurozone, but it's not expected to improve that much, okay? And tomorrow morning, we have import prices and GfK consumer confidence from Germany just before the show. Sorry, no show tomorrow. I'm on vacation. We'll talk about the schedule for the next few days also later in the show, in today's show. So we have also consumer confidence which is expected to remain unchanged in Germany. We had consumer confidence rise quite nicely over the course of 2015, but then we're beginning to slide once again from the highs. Okay, so these are the events for today. Before we talk about this week's events and the schedule, I have a question from Fabian. Good morning. Will Spanish elections outcome have any impact on euro dollar today? And what magnitude? Not so much on euro dollar because we already know the results are a hung parliament. Okay. I'll try to show you from one of the Spanish newspapers I follow, La Vanguardia. I think they have a nice chart. They'll talk about the Spanish elections. Okay, their homepage could work quite nicely. So it's bad for Spain, the uncertainty. We're already seeing the stock exchange falling. So let's try to zoom in a bit. And yeah, so uncertainty is bad for Spain. The Spanish IBEX 35 index is down 3.5%, 2.5%. Let's see if I have an updated figure. But minus 3%. Okay, it's falling a lot. Okay, so this uncertainty is bad for Spain. What does it do for the euro? Remember, the euro turned from a more risk currency to a funding currency. That means because of the ECB's printing of money, 60 billion per month, and now also reinvesting proceeds, and the negative interest rate. Recently, they lowered it to minus 30. Money is flowing out of the eurozone, seeking better stuff, better riskier assets with more yield. But in times of trouble, money returns to the eurozone, and it doesn't matter if this trouble comes from the eurozone itself. Okay, so this supports the euro in a bit, but it's also important to remember that liquidity is low. Many traders are off, and Spain is an important economy, but it's only 1 out of 19, number 4 out of 19, but still, well, at least now we see a limited impact. Okay, so we're seeing euro dollar around resistance. Again, safe haven flows, but I cannot really attribute this, say, okay, uncertainty in Spain means weaker sort of stronger euro and safe haven flows. Okay, now let's talk a bit about the results of the Spanish elections. I think these are already full results. Yeah, 100%, no changes. Okay, so let's see here in blue. This is the Partido Popular, which means the Popular Party, or it had an absolute majority. First of all, there are 350 seats in the Spanish parliament. 176 is absolute majority. The Partido Popular, the center-right government led by current prime minister in Spain, by the way, is called president, but outside prime minister, they had 186. Okay, they had an absolute majority. Now I'm showing you the results for the previous elections. Okay, and they are still the first party. They won 29% of the vote, but they lost a lot, so they have only 123 seats. Okay, so it's far from enough. Also, the mainstream left-wing party, the Socialist PSOE, Partido Socialista de Obreros Española, or something like that. Anyway, the sort of Labor Party of Spain also lost some vote. They got 90 seats in parliament. Okay, Podemos is the parallel of Syriza in Greece. More radical left, anti-corruption especially. There's a significant problem of corruption in Spain. Anti-corruption, anti-austerity, left-wing. They came out third with 69 seats. And a new party called Ciudadanos, they emerged from Catalonia, where I'm from, and they began as an anti-independence party, and they became anti-independence for Catalonia, and they became sort of a party on the national level. They are also anti-corruption for changing the system, and they're more center-right, okay? And they came out fourth. This result is similar to what the polls had expected, but Podemos did better than expected, while Ciudadanos did a bit worse. Anyway, now if we take these parties, if we try to build up coalitions, let's say we want a right-wing coalition. So we take the PP and the Ciudadanos, we have 40 plus 123, it's 163, short of an absolute majority of, short of a majority of 176. Same thing if we take both left-wing parties, PSOE, the Socialist, and Podemos, we have together 159, okay, also short of a majority. So this makes things very, very complicated. So we don't have an absolute majority for one party, and we don't have sort of a simple coalition for two parties, okay? Center-right and central. The only coalition of two parties that we can have is a sort of government of national unity, which means the center-right and center-left, both mainstream parties, PP and PSOE, together they do have 213 seats, which is a clear majority. We have that kind of coalition in Germany, where Angela Merkel leads the center-right CDU, and her coalition partners are the socialists. But it seems like a wild option in Spain, because both parties have rejected it. But you know what they say: never trust what a politician says before the elections. So who knows what's going to be. So that's one option. Grand coalition seems unlikely, but who knows. Another option for Spain is also a bit unlikely, to have an anti-PP coalition, anti-PP. That means PSOE, the socialists, the more radical left Podemos, and the new Ciudadanos agree together on an anti-PP coalition. Together they have, let me do the quick math, 200, 130, 199 seats, absolute majority. But there are big differences between Ciudadanos and Podemos. Podemos is left-wing. They support a referendum for Catalonia. Ciudadanos is right-wing, and they oppose a referendum for Catalonia. So I don't see that coming around. Of course, I'm making things a bit simplistic. And of course, we have other parties as well. So let's see if I can show you the actual numbers of the other parties. Okay, we have it here. So the third party is a Catalan party called ERC, Esquerra Republicana Catalana, pro-independence left-wing, so they could support a left-wing coalition, but again, not enough for a majority. And we have a right-wing Catalan party, Democracia y Libertad, but will they support a left-wing government? Who knows? And then we have regional parties from the Basque Country, from the left-wing party, very small, another Basque party, and I don't even know who these guys are. Anyway, it's very, very complicated. I think also very interesting. Thanks, Mauricio, providing another link here to the results from El País. I think it's Spain's biggest newspaper, leaning towards the left wing. La Vanguardia is Catalan mainstream. You can also, and by the way, it's interesting to see the different headlines and different papers, because papers here are very, very political. We have, for instance, La Razón is extreme right, and it's like Fox News, if you wish, even more, in the United States. And I don't know if two papers in Catalonia are extremely sort of pro-independence. Anyway, it's very complicated. Let's see if you have questions about this. Does the Spanish stock exchange falling also correlate to euro falling or rising? Is it uncertainty in Spain strengthen the euro? Should, yeah, it's a good question. This is what makes things complicated with the euro, okay? Because remember what happened in July? We had lots of uncertainty around Greece, and finally we had an agreement, okay? When we had the agreement on July 13th, Not a happy day for Europe, not especially not for Greece. We had the euro actually falling. Okay, so the problem was resolved, but the euro fell. Why? Because there's less risk, so money flows out of the eurozone. More risks, money comes into the eurozone. Even when the problem, the safe haven remains safe haven, even if it's the port of Piraeus, even if it's the port of Barcelona or Malaga or I don't know what. Okay, so that's what makes things complicated. The euro turned from a risk currency, one that, everything's good figures from the eurozone, buy euros, to a safe haven currency or funding currency. That means when we have bad news, money flows back in. But it's a new phenomenon. The yen is much stronger. The yen shows a much better correlation. If we have some kind of bombing or trouble or things like that, then we have the yen strengthening first, the euro after. The best example was the terrible tragedy in Japan in 2011. And we had the earthquake, tsunami, and the nuclear disaster in Fukushima. And the yen strengthened a lot, okay? Because money was coming back. So we have all this kind of... so it's sort of a mixed reaction. It's not a clear cut. Remember, it's just the first day after the elections. Of course, markets wanted a better outcome. That's why the Spanish stock exchange is reacting as it is reacting. But for the euro, it's a bit complicated. It's the fourth largest economy, not the first. And we don't know what government actually will have. The process now is that the king, Philip, he will give the chance to form a government to the biggest party. That means to the Partido Popular, to the center-right, to the current prime minister, Mariano Rajoy. I think he'll have trouble forming a government because there are not enough right-wing parties. The only option I see is a grand coalition with the left, with the socialists. And this could drag on for up to 2 months, if I understand correctly. Sorry. And this could mean, this uncertainty means trouble. The Eurozone crisis, all the trouble is sort of brewing. Greece is certainly unresolved. The debt issue is still on the table. The participation of the IMF, yes or no, is still on the table. In Portugal, we have an anti-austerity government, okay, which is also a coalition. The right-wing party won the biggest number of seats, but short of a majority. So we have, for the first time in Portuguese history, a coalition of the moderate left, the more Syriza-like, Podemos-like left, and even the communists are in government. Okay, they managed to form. And in France, we have right-wing trouble. We have, trouble for markets. I don't know what your political opinions are, but markets prefer more mainstream centrist opinions. So we have right-wing strengthening. So anyway, there is discontent in the Eurozone, and this will keep us for months. Let's examine once again, for moving on to other topics, page that Mauricio provided. We can try to form a coalition here. Let's take, how does this work? Yeah, I put the Partido Popular, which now are and get the mandate for creating a government. And now we can take the socialists, and we have a coalition. Okay, but that's just me putting things on this interactive chart and not reality, of course. So we have this party from Catalonia, which is right-wing, but they're pro-independence. So with them, we could have almost a coalition, okay? I'm not sure about the smaller parties, but I think it'll be hard. My estimation, I think that the current Prime Minister, Mariano Rajoy, will eventually have to return the mandate to the king, and we'll get the second largest party, the socialists, try to form a government. Natural allies, Podemos, short of a majority. More allies are Esquerra Republicana, the left wing in Catalonia, and perhaps they'll manage to get the other Catalan party, which is more right wing, and then they have exactly 176. Okay, very narrow, very unstable government. So who knows You can play with this tool a lot. And I think there's also a chance that we'll have another set of elections here in Spain. Okay. So it's really lots of unknowns in Spain, and this has implications for other countries as well. Okay, do you have any questions? We'll talk about other events we have this week. So in general, we had the elections in Spain. Tomorrow, we have final US GDP. I think it's the main event for the week in terms of indicators. It's the final result for the third quarter. Last time it was upgraded from 1.5 to 2.1. This time it's expected to drop, I think, to 1.9, more or less in the same neighborhood. But remember, I say it's the most important event of the week, but still, it's an old piece of data. It's for the third quarter. We're already at the end of the fourth quarter. Okay, so that's tomorrow at 1:30 GMT. On Wednesday, we have a busier day. We have final UK GDP. Not expected to change. In the United Kingdom, the changes in the revisions of GDP are very, very small. And then we have durable goods orders. This is also important for the United States. Perhaps more than GDP this week, I'm not sure, but who knows, depending on GDP. Durable goods orders are expected to show more, well, we're looking at core orders to see more impact on investment, on the future, on future rate hikes for the Fed, and also new home sales. When a new home is sold, we have money flowing into the construction of this new home and into infrastructure and into schools and hospitals and things like that. So that's also of importance. These are figures for the month of November. Okay, and then we have things winding down. Thursday is Christmas Eve, so we do have markets open, but most traders are away. Very, very low liquidity. Friday is Christmas Day. Markets are basically closed. Many brokers don't allow any trading. Let's look already towards next week. We have on Monday also most markets closed, sort of an extended Christmas holiday. It's Boxing Day in some countries, although Boxing Day is the 26th, but anyway, it's sort of an extended weekend. On Tuesday, we're beginning to get back to business. We have the CB consumer confidence, and then we have a few more not so important, meaningful events on the last 2 days of the year, the 30th and the 31st of December. Mostly on the 30th, 31st also it's the Eve, New Year's Eve, so many people are preparing to get drunk in parties. So anyway, on January 1st, it's Friday. Of course, markets are basically closed just like Christmas Day. And then a weekend, so it's a long weekend, basically from Thursday afternoon to or Wednesday even. No, I would say Thursday up to Sunday, and then it's back to school on January 4th on Monday. Anyway, regarding the morning show, I will be on vacation in the Canary Islands from tomorrow morning and coming back on the 29th. I'll get some sun and be ready and fresh on the 30th when digesting what we had, of course, and also talking about the next previewing the first quarter, previewing the year, previewing the following week. So we'll talk a lot about, we'll make perhaps New Year's resolutions and things like that. So we'll be here before the year ends to talk about what's next. Of course, the year ended with the big event of the Fed raising rates, and this monetary policy divergence, I think, is of importance. Okay. So let's see, do you have any more questions? Maybe we'll talk a bit more about the Fed. Oh, we're having some movements in markets. Euro dollar is slipping back in range. I wouldn't attribute this to the Spanish elections or anything else. I think it's just the ebb and flow of markets. Well, I see the US dollar re-strengthening but very, very minor movements across the board. Question from Fabian: do you expect your dollar consolidating during next days or making big moves, also because of low liquidity? In which direction? Good question. When we have low liquidity, we have two options. Okay, one option is to see that nobody's in the markets, so nothing is moving, everything's boring, very, very narrow range trading, 10-20 pips. Okay, the other option is that when we do have big news, then we can have big movements, because it's enough to have a small trade to have a big impact on markets. Okay, so we have I think the sort of surprises that we could see could come from China, because for China this is not sort of an important holiday, the New Year, and they don't celebrate Christmas. So we could have an interest rate cut from China, for example, one of the options, or a new stimulus program, or I don't know. Some politicians take advantage of these times of quiet, and they start something new, announce new measures. And if someone finds that on time, it can move the markets a lot. It's not exactly market related, but in 2008, on the day that the Beijing Olympics began, also the war between Russia and Georgia began. Okay, and also around the end of the year, we could have surprises. Remember that in August, when we had, the end of August, kids are on vacation, everybody's on vacation. We had the collapse of the Chinese stock market, for example, and the global rut. So in a very quiet time in markets, what is usually a quiet time, we had extreme action. Okay, so regarding euro dollar, I think we'll have consolidation perhaps in the next few days, and towards the end of the year, that means next week, we'll have end of year adjustments. Okay, we have, for instance, if you're managing a portfolio and you commit to holding US stocks at one specific level, or European stocks, or money, and things have changed because of currency changes, because of stock market changes, you have these last minute adjustments to clean up the books, to get back to your commitments. And you have, in general, lots of adjustments on the year end, so we could have could have wilder action. Let's look at euro dollar last year. It wasn't very quiet, so I believe we'll have. I'll try to find daily chart. Let's see if we can have just the turn of the year. Well, they weren't such big movements. The big movement began just on January 2nd, but we had actually the big movement, before the year ended, but we had a continued deterioration of euro dollar. We had the trend continuing throughout the last days of the year. Okay, so we might have that now as well. I believe that around Christmas we'll have a bit more quiet, but then afterwards, I believe we'll have more action because of these. The moves might not be logical. Technical lines might be broken. So let's see what happens. Okay. The follow-up question: will end of year adjustments move euro dollar up or down? I believe that the trend remains down because of monetary policy divergence, and you could have a bit more of this trend continuing, because the Fed announced rate hike, the skies didn't fall, and even hinted that 4 rate hikes in 2016 are something that is possible. I think we'll see only 3, but anyway, this is, and bond markets don't price that in. But in general, it's a more hawkish move from the Fed, and the ECB is always telling us it's ready to do more, even though the credibility is a bit hurt. So I think the move could be to the downside, but we never know. Eventually, this trend will turn around because everything will be already priced in, and with the lower euro, the Eurozone economies can recover. But towards the year end, I believe we could see it downwards. We have, I think, Barclays This bank provides these end-of-month evaluations, calculations, things like that, and we'll have that released, and they could perhaps provide us with information about what's expected in this end-of-year adjustments, but it doesn't always work as they expect, so just have to wait and see, I guess. Okay. Any more questions? Anyway, let's begin the wrap-up for today. This is the wrap-up of the live market open for Monday, December 21st. We had elections in Spain. Let's begin with that. Over the weekend, they resulted in a hung parliament. No party won an absolute majority. No logical coalition left-right of two parties has an absolute majority. Things are getting complicated. The Spanish stock market is hit. It currently doesn't have a big effect on the euro, but the news from Spain, from the Eurozone's fourth largest economy, will continue with us. And there is discontent in general in the old continent. Last week we had the Fed rate hike. We talked about that a lot. On Friday we had the final step of the implementation. It went very, very well. They successfully managed to raise rates, and we'll see how many rates we'll have in 2016. Markets are already focusing on that. We had also a surprising move from the Bank of Japan, and they did very little. It had a sort of it had a boomerang effect, strengthened the yen. It's better perhaps if they hadn't done anything. Anyway, stronger yen. Canadian inflation added to the misery of the loonie. It came out worse than expected. Oil prices continue falling. Today we have on the agenda very few figures: the Bundesbank monthly report and the Eurozone consumer sentiment. Both are second-tier events. Okay, in terms of markets, during the show we're seeing a strengthening, re-strengthening of the US dollar, sort of reversing course. Euro dollar in the range between 108 and 108.80. Resistance, further resistance 109.50, 110. Further support 107.60. Okay, pound dollar also sliding a bit during the show, 104.49, supported 148, resistance 149.50. Dollar yen a bit more stable, 121.10 to 121.50. All in all, we fell once again back to the lower range, under 122.20, which is a clear separator of ranges. I would say maybe 120.30 is further support, 122.20 strong resistance, further resistance 123.60. Dollar CAD in high range to touch 140 on Friday. It depends a lot on the next moves in oil prices. Okay, some kind of weak support at 137.87, a bit stronger 136.20. On the top side 140 and the sky. Aussie dollar 71.50, clear separator of ranges. We fell below this line and then got back above. 72.80 is strong resistance. Kiwi dollar relatively stable, 67.50, supported 67, followed by 67.90, 69, and support, further support at 66. So that's it for the wrap up for today. Remember, we have US GDP on tomorrow. We have final UK GDP on Wednesday, durables goods orders, new home sales, and then we'll have a wind down towards Christmas. I'll remind everybody that the show will be on vacation from tomorrow until Tuesday the 29th. So the next show will be on Wednesday, December 30th. Okay, so it's 8 days of vacation for me and the show. Hopefully we won't have messy markets for a long time. And so that's the agenda for the coming days. We have more questions. Another question from Fabian before we head off and say goodbye. How does an interest rate cut in China would impact the euro? What is the relation between China and the Eurozone? Well, Germany exports a lot to China. Okay, but the correlation there is not clear anymore. So in the past, Chinese stimulus would result in sort of happiness all over the world, stronger Australian dollar, and then more Chinese stimulus would be also good for the Eurozone, the trade relations there. Now, after the crash in August, any sign, any action from China is also often seen as a sign of panic. Okay, is the authorities not knowing what to do. What we had also in recent weeks under the radar, or a bit under the radar, was the Chinese devaluation. They gradually devalued the Chinese yuan after they already managed to enter into the SDR. So the IMF's SDR. So thank you very much, Tillen Chucks, for the comments, for the kind words. So they could make another devaluation. But remember, when they did the bigger devaluation in August, they had to backtrack just a bit and spend a lot of foreign reserves just on maintaining the value. But this could be a big story for next year, a gradual and controlled devaluation of the yuan. This means they still rely on exports and less on internal consumption, and it's not really good news for the rest of the world. Okay, so that answers the question. Another comment from Fabian. Thank you, Yohay, for the kind and informative answers. Your expertise and daily effort is always very appreciated. We'll miss you in the next few days. I sincerely wish you a good vacation. Wish your family a Merry Christmas. Thank you very much, Fabian, and thank you very much, everybody, for the kind words and coming to the show. Lots of regulars on the show, so I feel more comfortable, and I also can refer to previous things. And I hope you all have a great holiday season. We'll be here before year end, so we'll wish everybody a happy new year as well, and prepare you for the new year. Well, I guess in this festive atmosphere, perhaps it's time to go. Thank you, Yohay. Moltes gracias. Enjoy the Canaries. Yeah, that's in Catalan. Thank you very much. Catalan is a different language from Spanish. They are similar, but not the same, as they say here. Anyway, interesting times in Catalonia, interesting times for Spain, interesting times for the world. We had an exciting 2015, and it hasn't ended quite yet, and we'll be here next Wednesday to continue. So wish everybody, as always, safe and successful trading day. Happy holidays. Yeah, Chatima Tova. Yeah, that's for a Jewish holiday. Anyway, we say Shana Tova, which means Happy New Year in Hebrew. Anyway, thank you very much for the kind words, and everybody for coming to the show. And we'll be here on December 30th before the new year to get you up to speed with what's going on when markets return to full speed. I will be following what's going on, but I'll try also to enjoy my vacation. So thank you very much, everybody, for all the kind words and all the participation. And I'll see you next Wednesday. Okay, so that's it for today. Thank you and goodbye.